We're talking about one of the most polarizing stocks in the EV space today, NIO. The headlines are screaming and the risk is palpable because NIO's CEO, William Li, just dropped a bombshell regarding Q4 profitability. He said, and I quote, "There is no plan B." No plan B. That's a massive statement of intent, and it has Wall Street divided. Lee is putting the entire company's focus on one mission, achieving their first ever quarterly profit this quarter in Q4. Analysts like CMB International are skeptical, predicting NIO will miss the mark due to struggles with SOLs and administrative expenses. So, is this a recipe for disaster? Is NIO playing a dangerous game? Here's the critical point that the market might be missing, and why I believe this no plan B environment is actually incredibly bullish for the long-term stock trajectory. It's about focus and foundation. First, look at the trend. NIO just reported their lowest net loss since the third quarter of 22. The bleeding is already slowing dramatically. Second, and this is key, the company is shifting its philosophy. They're no longer solely chasing volume. They're focused on operational quality and achieving annual profitability in 26. This is a mature strategy pivot. But the biggest factor? R&D. Lee noted that NIO has spent heavily on foundational R&D, things like their own chips, their operating system, and the future-proof 900-volt high-voltage platform. He called this work akin to laying a solid foundation. What does that mean for you, the investor? It means the massive, cash-burning R&D spending is winding down. Future efforts will primarily be upgrades, requiring less substantial investment. That heavy initial investment is now a moat, and it should lead to significant margin expansion down the road. So, yes, there is immense pressure on Q4 execution, but William Lee's no plan B isn't a sign of desperation. It's a declaration of total commitment to proving the business model. They've paid the price building the technology foundation. They've sharpened their focus to operational quality. And they have new models, 2 coming in Q2 and 1 in Q3 2026, ready to capitalize on that foundation. This isn't just about hitting a single quarterly profit target. This is about crossing the profitability inflection point, validating the bull thesis held by analysts like JP Morgan. The risk is high, but the potential reward, when that R&D spending finally starts yielding high-margin, scalable sales, is massive. Keep your eye on those delivery numbers and the gross margin in the Q4 report. This isn't a stock for the faint of heart, but for those with a long-term horizon. This high-stakes pressure cooker is exactly what we need to see NIO transform from a growth story into a profitable, global EV giant. That's my take. Let me know what you think in the comments below. Don't forget to like and subscribe, and I'll see you in the next one.